What's up, everyone? All right, so right now we've got a stock up, CYN, over 200%. This is a really, big percentage gainer. And guess what? I'm the idiot that's red on it. How does this even happen? How is it possible to lose money while a stock is going higher? I'm going to show you how I did it in today's episode. Okay, so the good news is I survived the day, narrowly avoiding falling victim to complete frustration and disappointment and revenge trading. But I walked away before I went red. And so I'm going to lock up a small green day today. But CYN is the most frustrating stock that I traded this morning. So, how did it begin? Well, CYN started off this morning with a spike, as you can see right here at about 7:05 a.m. A little bit of a funny time, but that was when the news came out. So 7:05 a.m., they put out news about automation, AI technologies in collaboration with NVIDIA. Guys, if you have an NVIDIA sticker on your laptop, you could put out a press release that you're in collaboration with NVIDIA because the bar is so low. It is unbelievable. Because I'm thinking, all right, you're in collaboration. Does that mean you're, going into NVIDIA's office and you're working with their developers? What does this really mean? And when you get into kind of the meat of the headline, what you'll read is that they're using they're leveraging NVIDIA's robotics platform, which to me doesn't feel worthy of a 200% move. Now, as I say that, we now cross 250%, and I'm tapping out. Like, this is me tapping out. I refuse to take any more trades on it. I am emotionally hijacked. I'm too annoyed. I know that if I kept trading it and I lost money, I would throw my laptop into the ocean. Now, if I kept trading and I made money, sure, I'd be happy. But the downside of losing my laptop and all of my self-respect is not worth taking any more trades. So the downside of continuing trading is worse than the upside is good, which means I would have an inverted profit loss ratio or an inverted emotional response ratio from continuing to trade. And so that's where I'm having the presence of mind to say it's time to hit the road. So the stock right now just opened, the market just opened, and it squeezed up to a high of 1794. And look, for anyone that traded it and made money, I'm happy for you. But for me, for my strategy, this was very difficult. So why is that? And why is there a flaw in my strategy that I can't make money on a stock that goes up 250%? Well, generally, I do make money on stocks that go up 250%, but this one in particular was difficult. So let me go back to my very first trade on CYN. First trade was an entry at $8.71, and that was at 7:06 a.m. So 7:06, which is going to be right here, was my first entry. So I got in right here. It popped up, as you can see, to 9, and then came back down, and I got out break even. So I actually think I made like $60. Was not a good trade. Then it comes back up again right here. I try to get back in, and I get back out, and I lose, and I'm red $186. Again, for those of you guys that watch my recaps every day, I was up $65,000 yesterday. So being up or down $60, these are break-even trades. They don't mean anything. It dips down. Then it comes back up here to 882. I get back in, and it drops again on me. So I ended up having 3 losses on it, and I was like, you know what? Maybe I should go with a 3 strikes you're out kind of rule that, it's just like not happening for me on this stock, and just accept that this one is like not kind of behaving the way I would expect. This breakout kind of stalled out, and then it stalled out, and then it dropped. But I didn't listen to my own kind of gut intuition there. And I ended up getting back in. So let's see. So let me look for my next trade. So I ended up getting back in it at $9.40 at about 7:15. So that would have been, it would have been right about here. So it ends up popping up right here, dipping down, and I got in at 940. And I'm like, all right, this thing looks awesome. Well, I got a little stubborn. So I got in here at 940. I added at 950, and I added at 975 because I was looking for the squeeze to 10. And I scaled up to about 30,000 shares. That's a pretty big position. Well, what ended up happening is it was unable to break through $10. It dropped back down. And when it dropped back down, I ended up stopping out of it with a loss. And I lost about 20 cents, 30 cents a share, and went from basically break even on the day to down nearly $12,000. And that was basically adding right here, starter at the first candle to make a new high, adding into the breakout, and then it stalled out, and I stopped out, waited here, but stopped out when it came back down here. So then, not minutes later, it rallies all the way back up to 1060. And I'm like, feeling this is throwing salt in an open wound. I'm like, you've got to be kidding me. What is going on here? So I end up adding back at 1050. And I added back at 1050 right here at 720. It literally hit a high of 1060 and then it stops going up. So it went up like an additional 10 cents and then it stops. And I lost on it again. And I was just but that was a small loss. And I just felt like infuriated. So after getting kind of humiliated on CYN, this was right around 7:30. All of a sudden, KWE, which had been on our scanners up about 10%, pops up. I jumped in that as it started squeezing. That was earlier here pre-market, and I made 13 grand. Boom. All right. Well, that was redemption from the loss. So now I'm back to green on the day by like $1,000. So, okay, KWE pops up. I get some action on that. Made a little bit of money. Could have done better. It sold off. I did some bounces off the low, buying dips. They bounced back up, buying dips, bounced back up, but didn't want to overstay my welcome on it. So that was kind of it. So then I went back to CYN, which was now at $11 a share. And I had one good trade on it. This was at about 742. So let's see. Let's go back here. So 742 right here. I got in there with 10,000 shares for the break of 11, and it goes up to 12. And I scaled down on the way up, and I made $7,000. So now I'm at my peak, which was 14,000 green on the day and down only 5,000 on CYN. But that was not to last very long because I fairly quickly took another loss on CYN and just got myself really frustrated on it. So CYN around 8:15, I got back in it. 8:15, it was, so this one was a good one. Got in right here, pops up, drops down, got stopped out, lost like $3,000. Then it rips back up 3 minutes later. I'm like astounded. Right idea, wrong timing. Then I take a quick trade on JFBR, that's break even. I take a quick trade on ASTI and make 6 grand. Actually, so it was after hitting that $6,000 that I was at 14,000 on the day. ASTI hits the scanner, squeezes up here, and basically goes from $1.20 to $5.40, like straight up. Sells off, comes back down, whatever. So made a little bit of money on that. Wasn't the cleanest I've ever traded, but got a little profit on that. And at that point, I was peaked at 14,000. And then I had that loss on CYN, which must have been at 8:15, that one right there, or this one back here. Then it comes back up. And I stopped out again on it, coming up here to 12. And I stopped out again on it in this area. And at that point, I was like, okay, you're done. This is quite ridiculous. So here's the deal with CYN. This is a stock that has struggled to go parabolic. Has it been moving higher? Yes, it's been grinding higher. So what it does is it breaks out by like 15, 20 cents. And I'm like, okay, finally it's breaking out. This is where I'm going to jump in. Because I don't want to buy a stock in consolidation going sideways. Once it starts to pull away, normally that's when I jump in on a micro pullback for the next leg up. Unfortunately, this stock, whenever it has done these micro pullbacks, stalls out and stops going up and then goes back into another period of sideways consolidation. And then you get like sort of 3 candles up and then it's fading back down. A couple candles up, fading back down. A couple candles up, and I'd have to expect it's probably going to fade back down. Now, I could be wrong. Maybe now it'll do something different, but now that the market's open. But even here, 2 candles up and then choppy. 1 candle up, choppy. 1 candle up, choppy. Sort of grinding. 3 candles up, and then it fades. 2 candles up. So timing these 1 or 2 candles was very difficult. You know, we look back at, I can't even remember what I traded yesterday, but I think one of them was GCTK, which was a somewhat recent reverse split. So GCTK, we look at this one, and this one, I mean, this in one move, this is a 1-minute chart. Goes from 8 or 7 to 11, pulls back, then goes from 10 to 14. A little choppy, not the cleanest ever, but essentially in one 5-minute breakout, it goes up $10 a share. So basically you have, this is the 5-minute chart, pops up, pulls back, then goes from $8 to about $15 in one 5-minute push. CYN, let's look at the 5-minute chart. The 5-minute chart didn't go straight up. You've got 3 green candles, a 5-minute pullback, 3 green candles, a long pullback, 2 green candles, pullback, 1 candle, pullback, 3 candles, a little pullback, popping up, red back down, and now pushing higher. It looks cleaner on the 5-minute, but I usually trade on the 1-minute chart. And so for me, this one unfortunately was just really frustrating. So there's the resumption, there's the initial drop. Now sometimes this is where I would take a dip and a rip for the squeeze up to 20. Now I'm not going to do that because like I said, if I take that trade and I lose, I'm also going to lose the laptop because it's going out the window. If I take the trade and I make money, how much do I even make? Am I going to have a $50,000 green day? A $65,000 green day like yesterday? No. How would I do that with this range? I would have to take 60,000 shares and get $1 a share. But given, as you can see, how volatile it is, there's no way I could take that kind of size. So 20,000 shares and 3 points, maybe. But it's not going up 3 points. I mean, yes, you did get this candle into a halt, but aside from this move right here, which happened to be the biggest move of the day, which happened right at the open, which is a very high risk to trade, you haven't gotten these types of 3-4 point moves. So this is not a stock that really offered the potential for me to have a record-breaking day, at least pretty much as soon as it started to show the initial weakness after doing these kind of pops and drops. So, you know, the early kind of pop and then pull back, pop and pull back, I don't know. You know, I'm going to be annoyed, and I'd rather sit here feeling annoyed with $4,610.35 in my pocket than sit here feeling annoyed down 20 grand. You know what? I could wager that there are some traders who bought this on resumption from the halt, maybe right here when there was the first sign of green, 1850, stopped as it broke 18, and are now watching it halted up at $20.97 and are throwing their laptops out the window. So, you know, one of the things that I think is a good sign of growth as a trader is when you have that recognition that I'm not going to make money on every single stock, and some days are just easier than others. And on a day where it feels difficult and it's just not happening, maybe it's best just to throw in the towel and walk away and try again tomorrow. So as a result, you know, I'm not in a drawdown right now. My account is at all-time highs. Not the balance of my account, but if you looked at my, if you looked at my trading profits in terms of my reports here, I'm at all-time highs. And my account is at a pretty high level, but I'm at all-time highs. So go back the sort of 90-day view, and I'm sitting right up here. My drawdowns have been minimal, few and far between, and it's because days like today are days that it's so easy to become hijacked. I have enough buying power in my account that I could just say, screw it, and start pressing that buy button. And the more it drops, the more times I press it. It doesn't matter how hard I press the button. That's not going to turn a loser into a winner if the stock is just liquidating and it's selling. Now, we had another stock this morning, and actually, just as a side note, so ASTI was interesting because this one did squeeze up very quickly, and then it became very thickly traded. And I was like, what is going on with this stock? So it pops up really quickly here, and then it sold off hard. There was a lot of sellers, and then it ends up dropping. So I was like, what's going on with the stock? So I looked at the news, and I actually pulled up the filings. So I went to BAM SEC, ASTI. I pulled up the filings, and I noticed just yesterday they had an initial registration of new securities. Interesting. So that means they're intending to sell more shares onto the open market. So I read this headline, and it says that they registered to sell just yesterday. They registered to sell 3.2 million shares on the open market. And I'm like, okay, so could that explain why we're seeing so much selling? Because the company just registered to sell shares on the open market. Today it pops up, and are they selling? I don't know. And then all of a sudden here I see H.C. Wainwright. Now, H.C. Wainwright is one of the underwriters that work with a lot of small cap companies to help them raise money. But we have noticed a trend that when a stock is using H.C. Wainwright as their underwriter, they can be extremely choppy. I don't know. They have a sort of sophisticated system of how they sell the shares when they're selling them on the open market that make it very hard to trade these stocks. So once I saw that, I was like, okay, here we go. So that's probably why this is so difficult. In spite of the fact that ASTI, by the way, is a very low float stock. It's only 1.6 million shares, but now they're selling an additional 3 million shares, so the float's going to go up like times 3. Now on CYN is a very low float stock as well, 1.7 million shares. You wouldn't really think that it would be as difficult to trade as it has been today. And yet it has been. Now, they do have some registrations for sale of more securities, but they're not that new. We could look at the filings of the recent 10Q quarterly filing to see their cash on hand. So, it seems like they have adequate amounts of cash on hand, $18 million. You have to scroll down and see what the P&L is, the net loss. So in the last quarter, net loss about 7.5 million, or sorry, go down here, 6.5 million. So, and cash flows from investing activity, purchase of, okay, so that's just a purchase. So they had a $6.5 million loss right here, which tells us that that was as of March. So $18 million of cash, but some of that includes short-term investments. So are they going to sell short-term investments to finance operations? I don't know, maybe. But this is a company that probably does need to raise money. So are they going to work with an underwriter to be raising money? I don't know. It's possible. It wouldn't shock me. Look, this is just going to be one of those stocks that makes a big move, and I just am left feeling frustrated about it. But I think here's the thing. Look at that. So by the way, this resumed and instantly halted down. Instantly, 1887. Now imagine for a second that you bought out of FOMO, frustration. Let's just say for a second, let's just say that I missed this at the open. I then got stopped out right here buying this dip. And then as it squeezes up here, I bought, let's say 40,000 shares. I took my biggest position earlier, which was like 30,000 shares. So let's say I was so frustrated, I took 40,000 shares. I said, you know what? You got me, but I'm going to get you back. I'm in 40,000 shares of this thing at $20 a share. It halts up at 21. I'm like, game time. This thing's going to 30 bucks. Going to make 400 grand. All right. Well, now it's halted down at 19. So I'm down $40,000. And it halted down so fast there was no chance to get out. And now I'm unrealized negative $80,000. Now, these are big numbers. Maybe you're doing 4,000 shares and you're unrealized negative 8,000. And by the way, KWE rallying back up. KWE, love seeing this rallying back up. So lower float stock, but the pop topping tail and selling off, it's tricky. So I probably wouldn't, I'm done for the day, so it doesn't matter. But I probably, even if I wasn't done for the day, I wouldn't get back in this here because it just doesn't feel like, it's probably going to make it all the way back to 14. Nonetheless, this is the thing with trading. This is one of the, hardest, cushy jobs in the world. It's very cushy. You could do it from anywhere in the world, air-conditioned room, very comfortable just pressing keys on a keyboard. And yet, emotions. It's not hard for emotions to get the best of you. I know that from my own experience, and learning to walk away sooner when I'm starting to feel frustrated has been important. And seeing a few people in the room saying, Ross, hit the road, man. You're in Europe. Go enjoy it. What are you doing? This is clearly not happening today. Why struggle? Why fight it? You're right. Why fight it? It's just now the pessimistic side would be like, you're thinking about Jack and Rose and they're on that little floating piece of door in the middle of the ocean. And, Jack, don't fight it. Just let go. Why fight it? And then he just sort of slips away. Maybe he should have fought a little longer. Maybe he should have found another piece of board. Maybe he should have kicked Rose off that board. I don't know. Maybe I'm speaking out of turn. No, he shouldn't have done that. But you know what? He could have fought a little bit harder. So sometimes giving up's not the right move, but sometimes it is. I'm going to leave you with that. So that's where I'm at today. Going to be reflecting on my day a little bit. But you know what? Really, I just feel really grateful that I've had such a terrific month. And part of the reason the month has been as good as it has is because I've been pretty good at walking away. Now, Tuesday, for what it's worth, I actually had gotten myself a little frustrated and took that final trade where I went from up, I just kind of kept chipping away. I was initially up 28,000, then it was like 24, 22, 18, and then walked away with only $2,000. I should have walked sooner. Maybe I should have walked a little sooner today, but it's always better to walk now than to just keep going when you feel that way. Because sometimes when you're like, I should have walked away sooner, now you're like, well, if I can just make back a little bit, then I will walk. Just walk right now. Call it a day right now and try again tomorrow. The market will be here for you. And I'll be here for you. All right, so that's it for me. Reminder as always, trading is risky. My results aren't typical. Easy come, easy go. Ups and downs, that's what it's all about. But hopefully over the long term, you're making more than you're losing. Those of you guys that want to keep studying, I'll put links to a couple episodes right here and here. So check them out, and I'll see you back at it streaming 7 a.m. Eastern Standard Time tomorrow morning for members at Warrior Trading.